So why would you start from scratch when some of the smartest investors on the planet have already done all the hard work for you? Today, we're going to dive into a strategy that basically lets you leverage their billion-dollar research departments for free. Okay, check this out. There's this investor, Mohnish Pabrai. For years, he's beaten the market by an average of 6%, every single year. Now, that might not sound like a lot, but trust me, over time, that kind of outperformance is how fortunes are made. So the big question is,
how in the world did he pull that off? Did he have some secret algorithm? A crystal ball? Well, you might be surprised by how simple and how honest his answer is.
Yep, you heard that right. He says it himself. I am a shameless cloner. He doesn't even try to outsmart guys like Warren Buffett. He just copies them. And that strategy is the entire engine behind his incredible success.
Now, I know what you're thinking. Okay, that sounds cool, but how is that even possible? Isn't that, illegal? Well, it turns out there's a little-known regulatory filing that makes this whole thing completely above board and totally possible for literally anyone. And this really gets to the core of the idea. This isn't about cheating. It's about being smart. It's about learning from the absolute masters of the craft and following the trails they've already blazed for us. And here it is. The key to the whole kingdom is something called a Form 13F. Basically, in the US, any big investment fund managing more than $100 million has to publicly report what they own every quarter. Now, there is a little catch. The data comes out with up to a 45-day delay. But even so, it's an unbelievable peek behind the curtain.
So, what this really means is that 13F is Wall Street's public cheat sheet. It's right there for everyone to see. It gives you a direct look into the brains of the world's best investors, showing you exactly what stocks they're buying.
But, and this is a huge but, you can't just copy anybody. You have to be really, really selective about whose playbook you decide to follow. Not all giants are worth cloning.
You want to completely ignore the frantic high-frequency traders who are making hundreds of moves a day. That's just noise. Instead, you're looking for the quiet, patient, long-term value investors, the ones who run concentrated portfolios, meaning they make fewer bets, but when they do, they bet big.
We're talking about the absolute legends of the game. People like the late, great Charlie Munger, Seth Klarman, or Li Lu. These are investors famous for their deep research, their patience, and for only putting their money behind their absolute best ideas.
And that's exactly what you're hunting for. You don't care about the 50 tiny positions they might have. You're on the lookout for their high-conviction bets, the one or two ideas that they are truly all in on.
I mean, just think about it for a second. If a legendary investor puts 20% of their multi-billion-dollar fund into a single stock, what is that telling you? It's screaming confidence. It means they've done an insane amount of research, more than any of us could ever hope to do on our own.
Okay, so once you start tracking these giants, you'll begin to notice certain patterns. And there's one specific type of corporate event they just seem to love. It's an incredible hunting ground for cloners like us.
They're called special situations. Things like corporate spin-offs or mergers or big restructurings. These events create a lot of confusion in the market, which means companies often get misunderstood and, more importantly, mispriced. And that is exactly where these value investors swoop in to find amazing deals.
In fact, the famous investor Joel Greenblatt basically built his entire legendary career on this one idea. He made an absolute fortune by systematically finding hidden value in corporate spin-offs. It's a proven strategy that most people just overlook.
All right, so we've talked about what this is, why it works, and who to follow. Let's put it all together now into a simple, actionable playbook that you can actually use.
So here's the playbook. It's super simple. Step 1. Every quarter, go check the latest 13F filings for the handful of investors you've decided to follow. Step 2. Hunt for those high-conviction bets, their biggest, most concentrated positions. Step 3. Do your own quick sanity check. You're not trying to redo all their research, just make sure you understand the business. And then Step 4, go ahead and ride their coattails.
Look, at the end of the day, it's pretty simple. The greatest investors in the world are legally required to show you their cards. They're basically handing you a treasure map that they've already spent millions of dollars and countless hours creating. So the only real question left is, why on earth would you insist on drawing your own?